Well, hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, Emily is home. She's home from TCU. She's living in the house, and so we are no longer empty nesters temporarily. So she'll be here till about August 4th, and she'll be heading back to TCU. But it's great to have her home. It's just we're having a great time together. We actually had a chance to go to San Diego and take the boat out, and Jack was our captain. He did a great job, and Emily was able to invite some of her friends, and so just had a blast out there with the family. Nicole's doing great. She actually got to travel to the mainland. She went to San Francisco and she had a great trip. So it's an exciting time for the Solis family. Everything is well with us. Hope you and your family are doing well also. So market wise, well, frankly, May was a good month. We cranked along quite nicely. Again, first quarter of this year was good. April, we gave some back, and then May, we cranked forward again. The last week was a little rough. We had some news that wasn't quite as good. The GDP numbers came out. The gross domestic product came out at about 1.3 revised for the first quarter. So that was a little lower than we expected. And it looked as though consumer spending has slowed down quite a bit. So a lot of that excess savings and excess cash that a lot of these consumers had from COVID and all that stuff is kind of drying up. So we're seeing consumer spending getting a little bit weaker. On the bright side, though, we saw businesses spending more, particularly with buying artificial intelligence, which has kind of been a theme. I've been talking a lot about that. And so there were some good investments for businesses, and that helped kind of crank the GDP numbers up pretty good. Inflation is still the big story here, though. What's going to happen with inflation, and is the Fed going to be able to lower rates? With the economy slowing down like this, we should see inflation begin to really come down even more. So, it's a balancing act between slowing down the economy enough to keep inflation under control, but let's not slow it down too much to where we kill earnings and kill corporate America, the momentum that we've had going for a while now. So it's going to be a little touch and go right here for a little while, but I think the next move for the Fed will be to lower rates. That should I think that'll be good news for the markets. The 10-year Treasury's hanging out right around 4.6%. So yields are pretty strong. Year-to-date numbers on the S&P 500 are good, and the NASDAQ. So we're off to a pretty good start in 2024. Hopefully we could sustain it through the rest of the year. So that's all for now. Again, if you have questions or concerns or anything we could do for you, please never hesitate to call us. We're here for you. Take care and God bless.